Welcome back to Rand on Real Estate. I'm Greg Rand on 77 WABC. How you doing, Laura Smith?
Oh, good to be here as always.
Same here. Hey, we have another call here from Bill on Staten Island asking about Pheonix. And we're going to go to Bill in 1 second, and we're going to have Joe Mendez from Long Beach just to hang on another moment for us. Remember, if you've got a question about a market someplace either here or elsewhere, call me up. Let's do a little bit of research on it and give you an idea of how to go about this. This is a lot of fun. It's fun for me. I hope it's fun for you. So let's go to Bill on Staten Island. How you doing, Bill?
Hello, Greg. This is Bill. I'm thinking, not definitely Phoenix, but I'm looking for a cheap area like Phoenix because I want to buy some rental real estate, but I can't afford to do it here in New York or Brooklyn.
Well, that's, I'm glad you mentioned that. That's one of the reasons why I'm sitting here in Midtown Manhattan talking about these markets around the country. One of the reasons is this is one of the most expensive places in the solar system to buy real estate. And if you want to generate positive cash flow, it is a little trickier around here than it is in other places. So Phoenix is an interesting example. I'm looking at the 10-year chart of Phoenix right now, and I would think, if you didn't tell me otherwise, that I was looking at the Liberty Bell, okay? Picture the Liberty Bell. 2000, 2001, it shot straight up. It crested, and it shot all the way back down again, and literally home prices in Phoenix are below, just a little bit, but below where they were 10 years ago. So why, okay? Same thing we talked about with other markets where there was too much development. The developers and the lenders and the speculators went haywire. They lost their heads in Phoenix. And the reasons why they did is that every objective analysis of the Phoenix market tells you that long-term, Phoenix has got an awesome future. Okay, it's pulling people. Like I bounce over here to that migration map that I told you about. Again, all these things are available at ownamerica.com. But the Forbes migration map, what I see is that Phoenix has been drawing people from New York, Boston, Chicago, Detroit, Minneapolis, St. Paul, Los Angeles, San Francisco, and San Diego, pulling them in like a vacuum. All right. Now it's losing people. There's outbound migration going to places like the Carolinas and Texas and the Pacific Northwest. And I know why that is, because those are the places where the jobs have been migrating to, not just Phoenix, but other places. So people who went to Phoenix a few years ago for the vibrant economy, when the economy didn't go so well, they moved off someplace else to another vibrant economy. Very, very transient city. But the big picture here is that prices, the entire bubble has been erased. It's just been popped, okay? There's no likelihood at all that Phoenix real estate is going to go very much further down. Maybe a tiny, tiny bit just because of the artificial impact of foreclosures in that market pushing prices down. But I would sit here and tell you that is an overcorrection of Phoenix real estate prices. It is below the trend line. There's no good reason that real estate in 2011 should be cheaper than real estate in 2001 in this country. And if it is, it's because of something isolated, something explainable, but something temporary that once it's gone, it's gone. So I love Phoenix because it's a great American city that's in distress right now. And that's what you look for. Professional investors look for great places with short-term problems.
All right, well, thanks for the information. You got any other place in the country that might be affordable and good place to invest?
You know what? There's a couple of others that I could throw out to you, like South Florida. Florida's got the same kind of thing going on where too much development, too much bad behavior by speculators and lenders has caused a firestorm of foreclosures and negative activity in the market. But the migration patterns coming from the Northeast down to Florida are unmistakably stable and permanent. I mean, 72 million baby boomers, most of which living in the Northeast. Most of them are going down to Florida, but I look at the screen I'm staring at right now, and a whole heck of a lot of them are going to Phoenix also. So that's how I want you to go about this. Before you start going and scrapping around looking at properties, pick yourself a market that you can feel confident that because of population trends, job growth trends. Remember, every human being that lives in that area is going to want to live with a roof over their head, and that represents demand for renting your property in the short term, midterm, and then later on when you want to sell it, folks that want to buy it and become homeowners in that market. So thank you, Bill. Great question. Great market to be analyzing. I hope you found this helpful. All right, let's go back over. Joe Mendez, you still on the line with me?
I am.
All right, man. Thanks for being patient. I appreciate it. So back over to the West Coast again, the extreme West Coast. One of the things about Long Beach that makes it obvious for anybody listening is that it's a beach, right? You guys are on the Pacific Ocean. Is that correct?
That's correct, yeah.
All right. And that's one of the things, the investment properties that you're selling. I know you've got a couple of properties that you've been moving recently that are like under $200,000, even closer to $100,000.
That's correct, yeah.
So give me a profile of a property that you've recently sold or are selling right now.
Well, there's a property in North Long Beach, for example, that's listed at 188, and I think looking at it myself, it basically just needs paint, just cosmetic work, and over the span of 10 years, I think that property will certainly increase in value significantly.
And so the rental market for that's a single family home.
It's a single-family home, 2-bedroom, 1-bath, about 1,100 square feet possibly, and I think you could probably rent for maybe $1,500.
And that would cover the mortgage if you put down 30%.
Correct.
Yeah. Now that's interesting. So 188. How far from the beach is that?
Well, that's probably that's North Long Beach, so you're looking probably about 5 miles.
Okay, 5. To you, that's a long way, Joe. To us, that sounds like it's pretty darn close. Now. We're talking about a city, a property that is maybe how many miles away from Costa Mesa, where the average price in Costa Mesa is like $500,000. You're talking about just a few miles away, right?
We're about 35 miles. Yeah, about 30 miles.
So you're sandwiched in between. To the north, you have L.A. and Beverly Hills and everything else. To the south, you have Newport Beach, Laguna Beach, and Costa Mesa. And right in the middle there, and you opened up saying this, is pretty much the most affordable real estate in and around the L.A. area in places where you'd want to be.
That's correct. I mean, I've got a couple of clients that I'm working with now who live in other parts of LA County that are much desirable in terms of, like say Mar Vista or Santa Monica, so forth. But they can't afford properties in LA County other than Long Beach. Long Beach is their affordable point because he's somewhere in the 275 range. So Long Beach is an affordable city.
Do people in Long Beach commute to L.A.? Are there jobs right in Long Beach? What's the employment situation there?
One of the things about Long Beach is it used to be a commuter city, because a lot of people would live here. There's a lot of multi-family dwellings or single-family dwellings, condominiums, et cetera, and they used to work in L.A., Santa Monica, the West Side. They just work all over, but it was a commuter city. But over the years, it's grown. As you mentioned downtown earlier, it's developed because it was bringing more and more development into Long Beach. So it's definitely no longer that commuter city, although it still has that flavor.
That's cool. So it's sort of like becoming, as you said, a city within a city, a big city within a really big city.
Correct.
Now, what do you say about, I mentioned earlier about the politics in this country where, during this recession, the first people in this country that got our acts together and tightened our belt and learned to live on less were us, the people, right? Households stopped spending so much, started living within their means, started saving dramatically. The charts that show savings rates and mortgage pay down rates, no one ever really talks about that. But if you dig in a little bit, what you see is Americans have decided that austerity is the new cool. Okay, and so they're not living outside their budgets anymore, and they're paying down debt, which makes it tougher on the economy because consumer spending fuels the economy. But it's actually a healthy thing. It's like we're getting in shape again financially as households, and you also see it in corporate America. The stock market's doing great, mainly for one reason. Corporate profits are doing really well, mainly for one reason. They fired a bunch of people and cut their expenses. All right, so they learned how to trim down their expenses. I'm not trying to take any of the, say anything that would denigrate the pain of being unemployed, but the point is that companies did it too. They said we have to pare down our costs to match the new reality, and they did that, and they're not going to change right away. They're not going to start hiring again right away because they're enjoying the corporate profits and they're getting the job done with the workforce they have. Government is the last entity that was addicted to debt, just like everybody else was in this conversation, meaning, consumers, households, companies, everyone was addicted to debt, but the households and the companies have gotten off that train. The government seems to be trying to, but we can't quite tell if California's sort of getting on board with that plan. What is your sense as a resident there about that?
Well, that's a big question. All I can say is that there's, at least in my little world here in Long Beach, there's definitely a lot of opportunities for people to purchase real estate as an investment or as a first-time buyer, and that's a good place to put their money. I know for my own self. I think I've mentioned to you before. I purchased a property through a self-directed IRA. And it's actually worked out real well. I found that parking the money in real estate for me, in the long run, over a 10-year period, as you have outlined in your work, works well for me to increase my wealth with that particular piece of property. So
that's great advice. I'm glad you brought that up. The self-directed IRA, that you can actually buy real estate with that. People don't know that. It's the best kept secret in the investing world. Joe, listen, I'm really happy you were able to join us. Thank you for being patient through the breaks and everything. This is Joe Mendez from Coldwell Banker Coastal Alliance out in Long Beach. Joe, how do they find you? What's your website?
It's longbeachrealestaterainbow.com.
Okay, longbeachrealestaterainbow.com. Joe, thanks a million. Appreciate you having you on the show.
Thank you, Greg.
Okay, this is Rand on Real Estate, 77 WABC. Back in a minute.